Hi everyone, this is Alert Day Trading. Purpose of these videos is to journal my trades so I can think through my thought process, correct any mistakes, try to create better habits, and continue good habits. So I saw MYO pushing up this morning. I spotted it around here, and so I was waiting for a pullback. And my strategy is to wait for the first red candle to close and to buy the first candle breaking the previous candle's high. And as long as that fits into my risk to reward ratio, which is a minimum of 1 to 2. So this candle's high was about $15 with a low of $13.30. That's $1.70 risk. And the high over here is $17.50, but I figured, broke above these highs, so I had a feeling it could maybe make about $20, at least to $18. So I got in around $15, and I start to scale out at the first risk amount. So I'm risking $170, so I scale out at $1.70 above my entry point, which is about $16.70. And then my next scale out point would have been about $18.40. However, the stock did not break that previous high, so I got stopped out. I put some of my position at break even and left it under the EMA right here. And however, so my strategy is to scale out of a position, raise my stop loss as it breaks the EMAs. So I'm currently trying to decide if I want to keep that strategy, if I want to keep, maybe what I'll do is keep a portion always at my stop loss level until the trade has completely gone in my favor. Because if you look here, I ended up getting out completely. And I put an alert that if it breaks these highs, then I'm going to look to see what happens. So I'll get back to the stop loss comment, if I should keep it at my stop loss or trail it under the EMA. So as the stock broke above $18, then I got interested, wanted to pull back. And I was looking at the 1 minute and the 3 minute charts as well. So the stock broke above 18. I got in the first candle to break the previous highs after a red close, as long as it fits within my risk to reward ratio. So the low ended up being right here, about $17.20. My entry point was around $18 on the 1 minute. And I added to my size in the 3 minute candle. My entry point was about $18.20-ish, with the same stop loss under $17.20. And then the 5 minute candle as well. My entry point was about $18.80, with ultimate stop loss at $17.70. However, I do kind of trail my stop loss under the EMA. And I I scaled out as the stock went in my favor. So my risk the second time in this stock was $18, 17, 20 is about 80 cents. It ended up being about 75 cents. So every 75-cent increment, I scaled out a little bit until I held on to my last share, ultimately getting stopped out around $31 when it had this pullback here. So what I'm learning is to focus on risk to reward and only stick to that. And I have a day trade log, and I keep track of all my trades, and I keep track of each trade, how many R's, as you might call it, the trade went. So in this case, if I'm risking 75 cents, well, I take a calculator, and you subtract 32 minus 18. So that's a $14 gain. However, I was risking 75 cents per share. Divided by 14 divided by 75 cents. $14 divided by 75 cents. It's an 18 risk to reward. So I risked $1 to make 18. This is one of the best trades I've ever had. Now, I'm using a small size, so it's not like I'm still working out my trading plan and figuring out statistics. But if I stick to the plan, this will far outweigh any small losses I take. So the whole point of this is to stick to a plan that the risk to reward is in your favor. And I actually had the last 4 out of the 6 trades I took getting stopped out, taking small losses. This trade outweighs all those losses and even the gains I made in one trade just sticking to this plan. So I need to focus on sticking to the plan and continuing to do what I'm doing. The last point I'm going to make is whether I should stick to a stop loss or not, or raise it under the EMA. So I'm currently under the impression that I should do both, because I believe that if you raise a portion of your stop loss under the EMA, you decrease your risk, but also keeping a portion always at your original stop loss, raising it only after you've gotten at least 1 or 2 R's to at least break even. And then I think what I'm probably going to do is, as the trade reaches a new risk level, just bring up that final share size, about 2, maybe 3 risk behind, definitely following a trailing stop under the EMA. So a combination of both is my plan, because if I had held on to those shares, my original share size, even though I took a portion right here, I would have never gotten stopped out. I would have had my original share size. I probably would have added to my position here, probably scaled out also over here, because it did reach my to our level. But it took a while. The volume was low, so it wasn't in my trade plan. And then boom, there it goes all the way up there. So this happens not too often, so it's important to stick to your trade plan, not be greedy. Scale out, because you never know when the top is going to be. Pay attention to the volume. Is it increasing or decreasing? In this case, it's decreasing, so I got a little scared to get more into here. I did try a little bit right here, and I got a little bit more out of this position over here. I bought in at the break above this high, and but I wasn't crazy about the decreasing volume, so I kind of just got out really quickly. And you can see here another break of a high right here. But look, the volume continues to decrease, and it's struggling to break even higher. So it's a little bit longer video than I would have preferred to make, but I think this trade calls for a good overview or a good recap. Well, anyway, thank you for watching. If you have any questions, let me know. Again, these videos are for my journaling, but I am sharing them in case you all can learn something from them, or if you have any questions. All right, you all have a good day, and good luck with your trading.